And welcome back to Bitcoin Advisors channel. My name is Chris, bringing you this lovely cryptocurrency video right here from Westlake Village, California. It is another scorcher out there. Happy Friday, wrapping up the week. I think we have some signals that have been waiting to come to fruition, finally arrived today. And so today, the big event, right? What happened at Jackson Hole? Powell was more firm on his stance in regards to interest rate hikes, which is that basically what we thought in the first place. So I was wrong yesterday. I thought he might have been a little dovish, but in a sense, he said, we're going to do whatever it takes to fight inflation, and that's what we know they're going to have to do. Ultimately, somebody's got to pay the piper, and the Fed is actually being more clear with what they're going to do in regards to fighting inflation. He might have to Paul Volcker us like we saw in the 1970s, and he made several references to the 1970s inflation where, the Fed had to act firm and swiftly, and he used all kinds of verbiage that led me to feel that, he's not opposed to the 75 basis point rate hike coming into next month. So really, this is going to hurt all risk assets, starting off with the NASDAQ, taking it on the chin. And did we get stopped out right at the 618? No, didn't even get up there. The 382. So that is just a weak bounce. And, putting in some more divergences. This is a bearish candle on volume and a weekly closure that is pretty darn nasty here. So confirming the weekly downtrend is still intact, and that would be the 618 on this retracement. Yep, pretty much right there. Close enough is close enough. And I would say that's a good indicator on what's to come. And again, this has been a volatility event. And when I say volatility event, what happened is when Bitcoin trades sideways for a very long time, volatility gets low, and it has been extremely low, as we were noting on the 2-day time frame, starting back here, and even on the 4-hour time frame, volatility was extremely low. And as we got expansion, and we are continuing to get expansion, you'd expect the price to go in the direction of the trend. And what did we say just a few days ago is when Bitcoin broke the bottom side of this rising channel, that very likely we're going to bounce, grind up against the top side of the channel, and reject and play out the move to the downside. Now, the first thing I want to talk about is the 2-day time frame, a more powerful time frame. It is double the strength of a daily time frame. And the average correction from volatility expansion to the average correction from expansion of volatility, which is this indicator down here, is about 45%, okay, over about 24 days, courtesy of Mr. Crown. Thanks for pointing that out. And again, so the average correction on the 2-day time frame is 45% from expansion, and that is essentially when this thing gets above the 20 percentile. That is the first indicator saying this move is in progress. The second indicator, or kind of the first indicator, is this. The second indicator is that in my book, but is when we regain the exponential from this pivot right here. So essentially when the blue line gets above the white line. And that is when you start to see the move really start to play out. So what does 45% look like from the high on the 2-day time frame to the next low? 45% actually gets you down a bit further. 45% gets you down all the way down here to about 13,700, 14,000. That is pretty brutal. Let's see what it looks like on CMEs. what does it look like on the CMEs? 45% from the top to the next bottom. Yep. Coming right there at that 2618 fib, which I think is probably a good area for a bounce. So I think it all happens in one swoop. No, I do think that we probably get a bounce off this level first before it breaks. But what I am seeing, all right, so 2-day time frame. And something else to note is that Stokes, the momentum indicator, will typically catch the direction of the trend. So when these things cross down, that's the momentum. We see they cross down right here. We lost the exponential right here. Volatility just started to expand off the lowest level we've seen in a long time, to be fair. When is the lowest level? The last time we saw volatility this low, and that's just an average correction, by the way. Last time was July 2020. Oh boy, I'm willing to bet that expansion came to the upside, July of 2020. Volatility on the floor, and we lifted off from 9,000 to 60,000. Not a bad move, right? Okay, so to the downside, this thing is about to get pretty nasty, if you ask me. But that's it for the 2-day. Something else to note is the 2-day pivot. So momentum will cross back to the upside if we close above 24,000. The 2-day will close tonight, and that pivot will gradually come down over time. And we really don't have any divergences playing out. And that's what also leads me to believe that, you know, more likely than not, we at least come down to our target at 19.2 at that pivot. Again, I'll just draw this out from the 4-drive philosophy. Whoops. The 4 drives of hidden bearish divergence. Again, 1, 2, 3, 4. Lower highs gets you and 4 higher highs in RSI gets you a drive to the 2618 fib using a bearish retracement from the last low to the previous high. That's right where this guy's coming in. And I'd be willing to bet we head down to that target, which is coming in at really 19,610. If you draw it from this guy right here, this low to this high, you got this thing coming in at about 19,300. And I think that is actually going to be a little bit more correct we probably get a stop there first, but I am going to be taking profits early and often, to say the least. So I'm not giving any financial advice, but even if we use the wicks here, where did the wicks take us? That does work a little bit better, getting us down to the measured move of this target. And I did say, hey, look, if we did say any kind of a daily closure below that pivot, very likely this move gets extended, and we do hit that first target of about 19,300. Another thing to note is that volatility has not maxed out yet here on the 4-hour time frame. So this move does still have some legs potentially. And the 4-hour Stokes will cross back up above 21,253 with the nasty day in the stock market and the dollar rallying to the moon. This is going to be 4 drives. What do we call it? 4 drives? I would say from this point here, yes, we do have the 4 drives, which should give you a shot to the top side of the range. And in fact, it should give us a shot all the way up to the 618. The 2618 coming in at 110 for the dollar. And that could happen over the next week or two. And volatility is extremely low. Stokes are up, momentum to the upside. rejecting the bearish control zone. All good signs for the dollar, bad signs for risk assets. So that's it for the dollar. And what else do we want to take a look at? The daily time frame for Bitcoin. Again, what did I want to bring up on the daily here is that Stokes are going to cross down today below 21,200. Volatility is declining. So could we kind of, could we see volatility just start to tick up again? Yes, I do think that's a possibility. The day will close here in about 2 hours. What does the 2 hour say? Volatility is getting close to maxed out. And the hourly is pretty much maxed out. But remember, volatility can get pinned on the hourly for a few hours. If we see the 4 hour get up to that level, that would start to let me know, hey, this move is probably coming, coming to an end in the short term. Last thing I wanted to look at on the 4 hour. Yeah, as long as we close below there, the 4 hour target is going to be right here at 20,300. And I'm willing to bet we are closing below the bottom side Trillender band, which implies volatility expansion. And in fact, the way this looks to me, we are more than likely to hit this guy, maybe somewhere as low as 20,000, between 20. I wouldn't be surprised to get a wick down, right down to this guy right here, and then close it above there, play out a little bounce, and then move it on to the downside. I do believe people over the weekend are probably going to be hitting the oh no button, because, I mean, what else can you do when you see something like this? If you're any kind of a trader, I imagine people are beginning to not really feel the panic. Honestly, I don't think people are going to feel the panic until we get back below this level here at about 18,000, which would be the full measure move off of this target. And keep in mind, these things don't happen all in one day. It can take some time. The two-day time frame, this breakdown of 40% usually happens over about 24 days. So 2, 4, 6, 8, 10, 12, 14. So we may be a few more 2-day closures below, but this would be, again, another warning sign. If we close below the bottom side Trillender band in the next 2 hours, I would expect us to probably come down to this wick, coming in at 18,700. I think people are realizing, hey, the economy isn't as rosy as we thought. Stocks are not going to just V-bottom out of here. And risk assets are going to get hurt when the dollar gets strong. So last thing here is going to be the 5-day time frame and expansion from these extreme lows. And what would I define expansion? We want to regain the exponential, get above the 20 percentile. And I would say the 5-day move, which there is 5-day bearish divergence playing out from this point right here. Again, the price is making a lower high, but the RSI is making a higher high. And that should at least get us a shot to the bottom side of the range at 19,200 or 19,300. Close enough is close enough. And that's not very much left to go in the tank. I mean, that's another 6% down. We're having a 4% down today. And let's check out Ethereum targets. What do we have for Ethereum? Ethereum 5-day Stokes will cross down. And that's the other thing is on Bitcoin, the Stokes will cross down in 2 days, which is going to be Sunday. So if we see these cross down and volatility began to expand again on the 5-day time frame, Just to give you an idea, the last expansion on the 5-day time frame did go something like this. So where did we start to expand from? Right here. The same low level. And that was a 57% move to the downside. And we all remember this one right here. So expansion starts to happen right here. And what kind of move was that? That was a 35% move. This one right here, when did expansion begin to occur? So as soon as we ticked up, just the slightest tick up was right here. And again, this is a volatility event. When you get low volatility, one thing to expect next in Bitcoin land is extreme volatility, and you would expect the price to go in the direction of the trend. And with the blood in the streets in the stock market today, I would not be surprised to see this take another leg down, based on the 5-day, based on this, and yeah, a closure below the 382. We might bounce coming into Monday, a little bit of a fake out bounce back to the green 55, but target should be down to this, and that's exactly how these fibs play. Is you come up to the 618, back down to the 236, but traditionally speaking, a bull trap confirmation has occurred on the stock market. That's the market that rules them all. You know, Bitcoin's going to do whatever the stock market does. So here's where the bull trap comes in at the 618. And you get confirmation of the bull trap once you close back below 12,000 or below the 382 right here. And we have done that decisively with volume, with a bearish engulfing candle on the daily time frame. So that, and again, all these things are lining up. Stokes are down. Volatility is expanding. The last expansion move in stocks got us a move to the upside of 20%. So what would 20% to the downside look like after expansion? Let's say it's from this move right here. 20% to the downside would put us down here, all the way down to 10,480. I think that's a decent enough target. And okay, so enough on that. Let's get on to Ethereum. Ethereum, I am also watching the 2-day time frame very carefully here today, and we did have a decisive closure above there. And we did say, very similar to Bitcoin, we would grind up against the bottom side of the channel, which this one was more like a rising pizza, if you ask me. But no, not even close. Not even the same. I think it's on the daily time frame. It might look a little bit more like that. Let's see. Can we draw it out with any confluence, anything? Nope. It looks better like that. And what is the measure move off of this guy? So again, we have the same 4 drives of bearish divergence, hidden bearish divergence, coming all the way back from this point right here. We've got a higher high there, lower high in price, higher high here, lower high in price, higher high, lower high, and then again, once again here, and then this will be the fourth or fifth one. Let's see, how many is that? That's 1. Excuse me, we're coming back from this point. So that's 1, 2, 3, 4, 5, the 5th drive back into the bearish control zone. So just using the 4 drive philosophy here on the daily time frame, I think we could more clearly use it on the 2-day time frame. But that gives us our targets. And the first target is at 1379. And then the second target is at 1012. And just remember, guys, that Bitcoin had a 40% move to the upside from the lows. And Ethereum had a 120% move up from the lows. So which one do you think is going to fall harder? I would be willing to bet Ethereum takes it on the chin a little bit harder. And just curious, where does this line up if we use a fib retracement? Where would we want to use it from is the question. Let's look at the weekly time frame. Yeah, from the high to the low. And that is what you would call a weak bounce. Up to the 382, getting rejected, back below the 236 today. Well, this will not be closing until Sunday. So we have seen, oh, look at that gap down here. Willing to bet this gap gets filled. I'm glad I saw that. Just like this one got filled to the upside, this one's going to get filled to the downside. And if volatility does tick back up and the Stokes cross down below 1205, which, what do you know, that would be the area for closure. What am I expecting coming into next week? Let's see, over the weekend, let's say Ethereum, this is the futures chart, by the way, so this will not be open over the weekend, but let's say spot price does come back down. Let's see, where would that be on spot price? Back below this level. There would be a huge gap, a gap down to fill this gap. So maybe it doesn't. Maybe we just kind of get back here. However, if we get rejected at 1200 or 1300 and we just pop back up from 1260, it looks like 1270, momentum is still to the upside. And however, we will cross down below 1200. So if you do see that happen, if you see Ethereum get below 1200 on the weekly closure here, which is coming up on Sunday. Let's see. Yeah, below 1,200 bucks, that would cross us down. And don't close your eyes here, but the move down was as we crossed the Stokes down for Ethereum. 69%. 69%. Let's see, what was this one? And it isn't going to be coming up from a very low level, and volatility has not turned up yet. So kind of a couple of things in favor of Ethereum, maybe not getting as big of a move to the downside. But whatever Bitcoin does, these altcoins are going to do even more. And I wanted to check in on a couple other coins for you guys that I am looking at. Again, another one, Ethereum Classic here. Ethereum Classic on the 2-day time frame, since we are going with that time frame for Bitcoin. And this one had even greater, I think a 200% run up here. The 2-day has not closed back below there. But I would be looking for a target of about 27 first stop, and then the second stop down here at 17 bucks. That would be the full retrace. Volatility is about to expand. If we do see this get above the exponential, I would be looking for that move to continue. All right, so that's the target for this guy, Avalanche. This one actually held up okay today, but does look like it's following through with the rest of the market here. And do we have the 4 drives? Would we consider that a high? Not particularly. I'd say that's the last high. And we got 3 drives. Oh, this would be the 4th if we do confirm this. And that would give us a target for Ethereum going down here to 1847. First stop, second stop, 11 bucks or $12. $12 Avalanche, Matic, another one that has held up reasonably well. It's only down almost 4% today. But using that 2-day time frame, again, all of these are moving in concert with each other. This one does have the 4 drives. Again, lower highs and higher highs in RSI coming from a high level, rejecting right there at the green 55. So from the low to the high, that would be the target right here at about 67 cents. If we wanted to be a little more aggressive and not call that a low or that a high, yeah, a more aggressive target down at 62 cents for the first bounce and the second one at 38 cents. I do imagine these get quite crushed. If Bitcoin does come down, I believe they will bring the rest of the market with them. And last one for Solana. I had this one measured out over the week. And this one looks like it wants to hit the measure move down to about, call it 30 bucks. $30, and let's see if that lines up with the good old 2618 fib. No, it would be pointed down a little bit more. Maybe I measured this incorrectly. This is more at the 50 percentile. So the way you measure these triangles is from the 50% full, and they typically break at 75%, and that would get you closer to the $27 target. How does the 5-day look? 5-day is crossing down. Volatility will be ticking up here slightly. Yep. So if Bitcoin gets it, these guys are going to get it too, just probably to the tune of maybe, double, if not 25% more downside risk. All right, guys, I'm going to wrap it up with that. I want to look at one more, FTM. Look at this guy. I've been trading this one for such a long time. It was great to the upside, great to the downside. And we are crossing down. Volatility is barely taken up, so we want to see it regain the exponential, and if it does, I mean, that's, I think, the lowest volatility read we've seen, and I would expect the full retrace to go into effect. 17 cents, that's going to be rough. Okay. That's going to wrap it up for today, guys. Hope you have a blessed and highly favored day. We will see you on Monday, and take care.